Hello traders, Gary Wagner here, just about 10:25 in Honolulu, 4:25 in New York. It is Tuesday, 18th day of April, 2017, and this is the Daily Report for gold and silver. We have gold pricing nominally lower in the futures markets, currently trading at $12.9140, off about a half a dollar. However, if you recall from yesterday's show at the same time, gold was printing roughly at $12.86, so it's actually above that settlement price of yesterday. Low on the day has been $12.80 with a high of $12.94. We certainly want to look at that high, as well as an interesting candlestick pattern that I have uncovered based on the last three trading days. Over to spot gold. Spot gold is off of the highs, which were roughly at $12.9230, but is still showing approximately a $5 gain. $12.8940. Current print $12.7909. Now, this move has been all dollar based. We'll look at the dollar in 1 second, but first over to silver. Silver currently trading off about 22 cents, off about a full 1.25% at 18.28. Of course, tremendous pressure in U.S. equities continues, and the industrial component of silver is certainly showing its colors, and therefore we are seeing an exaggerated weakness and sell-off when compared to current gold pricing. When we look at spot silver, that is also trading lower, off by about 10 cents at 18.28. Now, we talked about the dollar. Let's go ahead and pull that up. And the dollar has been under tremendous pressure, breaking below 100 on the dollar index, currently at 99.42, the low 99.38. So we're just ticks off the low, and we are seeing the dollar in terms of depreciation losing roughly 0.75% on the day. So traders, if you recall from yesterday's show, we were talking about this long-standing trend line and how recent price action has come right up to this particular price point, however, not able to take it out. What we would like to see, obviously, is on a closing basis, this market move above this trend line and close above this trend line. And of course, the reason that I am putting so much emphasis on this trend line is the extent to which this trend line is drawn from, meaning the highs up past 1900, the all-time record high, and running it through all of the recent tops in the market as this market moved from 1900 down to these lows just below 1100 at 1040, and then last year's yearly high at around 1380. And the reason to take this into consideration with such weight is the fact that when we look at the bigger picture, we've seen this market decline till the lows that came in end of 2015, beginning of 2016, and that's when we saw, at least on a technical basis, a dramatic change in the market. Is that for the first time in this multi-year correction did we see the year close out, meaning 2016, with a higher high than the previous year, as well as a higher low. Now, this year, we do have the higher low. So we have the first component of a continuation of this upside trend, but to really be decisive and to be able to say with conviction that we are in some sort of a bull market, we need to get a higher high. So we'll need to take out this level at 1380. However, prior to that, we still have to be able to take out this current resistance area. Which brings us to this current daily chart, in which I have identified a candlestick pattern simply called a tri-star top. Now, when I identified this pattern yesterday, we had a much smaller body size and we had much more of a doji here. In essence, what a tri-star is where you have a series of dojis or stars in which the center star is above the two other stars, and you get a formation that looks something like this. Now, we can certainly see that we had met the components for day 1 and day 2. As of last night, we had met the component for day 3, but I can call this with some confidence a star top variation. Now, what that lends me to believe on a technical basis is we will see either some sort of sideways action and consolidation in this market, or even a possible small retracement from this recent advance in which we saw the market move from 1180 up to 1291. So we've gotten that $100 rally. So we could see it come down a little bit, maybe go as low as 1260 before coming to challenge the resistance line that the market is currently finding the inability to overcome. And traders, as I said in our opening letter, as well as open commentary at the beginning of this report, today's upside move in gold, up about $5.40 currently in terms of spot prices, were all dollar related. Weak US dollar more than accounted for the entire move. We're looking at a daily chart, and you can really see the substantial downside activity in the dollar, in which it sold off about 0.8% and is currently trading at 99.49. So when we take a look at the Kitco Gold Index, which I have just pulled up, you can see that dollar weakness today accounted for a positive change of about $10.40. Actual trading in gold actually took the prices lower by about $5, and that's how we're getting our net change of approximately $5.40 to the upside, in negative correlation in terms of trading, and the dollar more than compensating for any of gold's weakness today. In other markets that we follow, continued downside pressure in U.S. equities. Dow Jones, another triple-digit downside day, losing about 113 points to close at 20,523. Net change on the day, about 0.5%. About 1/3% in the Standard & Poor's, 2342. And when we go over to the NASDAQ, you can see that that has powered much of the morning sell-off, only off about 0.1% at 58.49. We continue to see downside pressure in U.S. equities markets, with the Dow Jones Industrial Average closing off by 113 points, closing today at 20,623. We've absolutely seen this market move sideways for the latter part of a couple of weeks, but even within the confines of the sideways move, we've seen this downside bias breaking below its 50-day moving average approximately 5 trading days ago, and now sitting close to the first area that we would look for some kind of potential support. And that is based on this Fibonacci retracement. Our 23% retracement level comes in at 20,405. Low today, 20,462. So we've come close to that. If in fact this area does not hold, the next level on a technical basis won't come in till the 38% retracement, and that comes in below 20,000. When we look at this market in terms of just straight activity, you can see both at this area of right around 20,000 as well as our current pricing structure have both contained sideways activity. Here we can see this particular area, an area of, in essence, resistance. As the market came up, it tested this top before really breaking to the upside at the beginning of this year. So without a question of a doubt, we are certainly at a critical level. If this area holds, this 23% retracement area, we could see a bounce back to the upside. However, if we breach this particular price point, all bets are off. And as I said, I would look for a substantial decline, taking the market below 20,000 vis-a-vis the Dow. Ever since trading to a high just below $54 a barrel, and this was back mid-April, we have absolutely seen some pressure come into the market and crude oil trade to lower pricing. We had this top here, which occurred roughly in the middle of the month, over the last 4 trading days, 3 of them have resulted in lower pricing. We are currently at a 23% retracement. This is a shorter retracement, which begins at these lows at 47 up to the highs just below 54. If the market holds at this area, it tells us one thing, but I think it's more likely than not that we will see oil continue to drift lower, trading as low as $51 a barrel. And traders, lastly, I do want to take a look at something we haven't looked at in a while, which is the gold-silver ratio. We have seen the gold-silver ratio move, advancing the price of gold in the most recent past. We are now trading at about 70 ounces to 1 ounce of gold. There's our ratio. We've seen it trade as high as about 84. That, of course, occurred at the beginning of this year, and from there it subsequently fell to 64. My sense is we could see this market move back up to approximately 73 on the ratio. There's absolutely no doubt, even with incredible dollar strength accounting for more than the majority of today's upside move when we look at spot pricing, or the steady pace that we see it when we look at futures, we have seen this market have tremendous support, and given potential corrections or potential sell-offs due to profit taking, any of those activities have been curtailed. Therefore, my recommendation is to maintain our current long position. We will maintain our current stop, but as I said yesterday, we are looking to move that up, and we will do that within the next day or so. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.